Hi guys, welcome back to another YouTube video. Today we're going to be talking about fair value gaps and inverse fair value gaps, and we're going to be going on the market and showing you guys some examples of this. In no way did I make this up. I simply learned this from other people, including ICT concepts. So yeah, let's go on the chart and just find out a lot of trying to spot these out. So first we're going to try to spot these fair value gaps, regular fair value gaps, and see what market does. And then we'll go over some actual trading setups. So let's mark some of these out for today. Market opened around here. And you can use the box, the rectangle. I know some people use I think I believe some people use this. So you can either one works, but I like the box. It's easier. So let's mark out fair value gap right here. And basically, what a fair value gap is, just to give you guys a deeper understanding, is a 3 candle pattern with one of them leaving a gap, which is orders waiting to be taken or filled. And like right here, market got pushed into all of this. And then basically just think of it as filling up the gas in your car every time it goes into one of these, just to go faster that same way. So you can think of it any way you want, but it's just gathering something to push price where it wants it to go. So right here you see it respect this one. It went up to the midpoint, came back down, all the way down. Okay, and then we have another fair value gap right here. As you can see, price came into it, went back up to this one. And then we have this fair value gap right here. As you can see, price went into it completely and back out. And then we have this one right here. Price went into it to the midpoint and then back down. And then let's look over here. So alright, well, let's go look at yesterday a little bit. So yesterday's session. So around 11, it's 8:30 p.m. So alright, here we are. So basically, let's mark some of these out. So we have this fair value gap right down here. Get respected. Price rallies. We have, yeah, you might say this did get filled right here, and price didn't go up right here. So this did get filled, and price didn't go up. So this won't just work completely 100% all the time. As you can see, you'll also have to take into consideration the trend. We had an uptrend here, but we also had other fair value gaps that were waiting to get filled. So if you have other fair value gaps right next to One, you have to take into account that that one can get hit as well because they are trying to gather all of these orders. Price might even come down here too. So don't expect just to be able to take a trade off this. Like expect to have at least a breakup structure after that in order to see a full continuation. So like right here, as you can see, right here, we came into this fair value gap. But we actually broke through it a little bit. Um, but when we first came into this, we didn't have a breakup structure. So we probably wouldn't have used it. And then at the same time, we just had broke structure up here into a downtrend. We'll wait for that to load. But and then here we have another fair value gap. And you guys can go around the charts and do this yourself. You guys can go mark these out and see what price does, and then you'll see for yourself. So I'm just waiting for this to load. Alright guys, we're back. So basically we had marked out that. We talked about how market just switched to a downtrend right here. So you wouldn't necessarily want to trade off of that. And then we have this fair value gap right here. And as you can see, price came into it and then back out. Market did change right here. Market switched right here. So that would have been a good one. And then not only that, you could have caught this next continuation right here. So that's how you can always catch a trade if you miss the entry, if you miss this breakout structure. And you can always wait until price comes back into it. As you can see, it came back to the midpoint and then went back out. And then continued up to the upside. Right here, we have another fair value gap. And you might say like this got respected and it didn't rally that high. But you also have to take into consideration that price is moving from highs and lows to fair value gaps to fair value gaps. So it moves from this fair value gap up to this high and then back down to this low and then up to this fair value gap, back down to this low, and then up, and then it would come into here, but this time it didn't. Came back up to these highs right here, came back down, and then that's an inverse fair value gap right there. And we'll talk about how you can also trade these fair value gaps, right? These inverse fair value gaps as well. So yeah, basically, I can show you guys right here. So you might look at this and say, okay, so price came in, went back down to hit this low, but right here we also have an inverse fair value gap right here. So what that basically means is you can also mark it out like this. But what that basically is just a stronger confluence, because when you have an inverse fair value gap like this and you see this black candle completely pass through it, then that's a stronger sign of market switch, even though you have a break of structure right here or right here or right here, whichever one. If you guys can't spot them on this, then you can spot it on this all the time, So you guys have a break of structure right here. So let's write that down. You have a break of structure right there. And then you have this fair value gap. And as soon as you have a candle past that and not respect it, it means it's not going to continue up. This is an uptrend right here. It's not continuing up. It's actually going to go lower because it broke straight through it. So now all we have to wait for is for price to come back up into this fair value gap right here. Let's switch the color. So all you have to do is wait for price to come up to this one, respect it, come down, break right here, and then it comes down to this low. Obviously, sometimes you're gonna have losing trades like this, and then sometimes you're gonna have winning trades like the trade that I got today that I'm gonna show you guys in a second. So it did go back up to hit those highs, and then we're gonna go back to, and I'm gonna show you guys how I traded today's session. So basically, as you can see, market opened right here for me. So we marked out this high right here, and this is the actual setup. So marked out this high right here, marked out these lows that got created in market open. We marked out this low as well. Okay. And then I had other stuff marked out up here that I'm not going to show you guys just because it's a little too advanced, and I'll show you guys later on about stuff like that. So we're going to get this right here, fair value gap right here, and you guys can extend these as well. So let's see. Okay, so there was 2 trades today that I seen. I actually got the first one. I didn't take the second one. So here I'm gonna explain to you guys how I used fair value gaps in this to take this trade. So basically, I started off right here, right around here. We saw this high get swept. We came down, swept these equal lows right here. Came up. I marked out this fair value gap right here for an inverse fair value gap. Okay, so let's see. We don't need that one extended. So we have this fair value gap right here. As you can see, price comes down to sweep all of this, comes back up, and then comes back down, comes into this inverse fair value gap, ends up respecting it. So right here, this is where I entered right here. I believe right around here, targeting 25% point of, and I'll teach you guys about stop losses and take profits and all of that. So basically, you could have targeted the middle, but I targeted right here. So 1 to 4 risk to reward, not bad. And so price came down again, but if you have your stop loss below this fair value gap, then you wouldn't get stopped out. You're perfectly fine. And then as you can see, we have another fair value gap right here. Price came into it, came back up, respected that, came back down, respected that, went back up into this big fair value gap right here, came back down, came up, respected that, came down, came up, came down, came up, respected that, came down into this, and it disrespected that. So as soon as I saw that, I was waiting for this inverse fair value gap on the other side to get hit, because that would mean price is respecting that. So that would mean a continuation, because this got disrespected. And what do we know about fair value gaps or inverse fair value gaps getting disrespected is that if they're not respected, they obviously don't. They obviously are not going to hit. So basically, we came up into this inverse fair value gap. We came back down, touched into this. We respected it. So we know that after it respects this, it's going to come up back into this one. And we're going to wait for this to get either disrespected or respected. If this gets disrespected, we can always target up here or higher, because this already got hit and a little bit of disrespected. But on a higher time frame, this is just a wick. So yeah, and so this got respected, came down, broke structure right here. So right here, this is where we broke structure. You could have entered right there, and you could have targeted. Let me show you guys. could have targeted these lows down here a minute. So could have targeted. Let's go to the 15-minute. I would suggest going on higher time frames to find your lows and highs that you're wanting to target. So let's wait for this to load. Okay, so here we have, let's mark these out. Horizontal array, that's what I use. So here we have this low right there. We have another equal lows right there. We have lows right there. We have these lows right there. And then this low right here and this low down here. I wouldn't suggest you guys target lows that low just because it's better to just stick to 1 to 2, 1 to 3 risk to reward as a beginner. So as you can see right here, we had a break of structure. We also had a break of structure up here. So noting that, you could have entered off of this candle, put your stops on this high. I would always suggest, even if, because price did come back up to stop these people right here, so I would suggest either putting your stop loss on top of the candle or at the high for these kind of trades. But yeah, basically I entered up here as soon as the candle came down. I'll show you guys. So this is where I entered right here. I put my stops at the, I believe, at the base of that candle, and then I targeted, I believe, this low right here that got swept right away. You guys can obviously target these lows as well, and then I wouldn't suggest targeting down there, but targeting the lows that are closer to this is helpful because it's more likely to get hit. And then also, if you have one take profit right here, and you can always move your stop loss to break even or to a 1-to-1, and then when price respects this, then you can just wait until your second take profit hits, and if price disrespects it, then they'll just hit your 1 TP. So even though you got stopped out, you still take profits, and you have the profits of taking money out on the first take profit as well. So that could really help you guys. It's little stuff like that that I'll be explaining to you guys later on next week. So yeah, that's basically came up to here, gathered some orders, came back down, took all this, and then right here we have a inverse fair value gap right here. You can use that. You can use this. Just watch market go mark these out, and it's more helpful to mark these out during New York session because that's when we have the most price action, as you can see. Other sessions, as you can see, there's not a lot going on. So even yeah, so that's fair value gaps and inverse fair value gaps and how you can implement those in your trading. Um, yeah, so that's the video for today. And next week we're going to be talking about order blocks and breaker blocks and a little other more confluences after that. And then the week after that is when I'll start trading with you guys on paper trading. And then a week or two after that is when I'll start live trading. But we'll get into that next video. So thank you guys for watching. Please like and subscribe.